We're getting back to this Bank of America stories. We've been talking about really these huge earnings coming out from Bank of America, beating the street by a wide margin. I want to talk now, with me now is a fund manager who owns shares in BofA. He's David Dietze, the founder and president of Point View Financial Services. David, good for you to stop by. And we're just about 15 minutes away from the conference call that BofA is going to have with analysts. What are you hoping to learn that's different from, that's outside of what you've seen in the report?
Yeah, well, everything is about the outlook here. And one thing that we really like was the fact that they actually netted out a small profit in the credit card division. But as this new regulation governing credit cards comes into play in the second half of 2010, how are they really going to make money in the longer term? The problem is the credit card business is going to be far less profitable. So certainly we want to focus on what their plans are to restore that to not just miniature profitability.
You're talking about the $2 billion that's going to be taken out in the next few quarters.
Exactly.
Starting the fourth quarter.
Yeah, there's restrictions on the interest rates they can charge, other restrictions that make that business far less profitable. So certainly you want to focus on that.
Good for consumers, maybe not for the bank.
Well, that's right. That's right. The other thing we want to focus on is we saw blowout results in the investment banking, particularly the fixed income division. In fact, absent that, there would have been no profits. But is that sustainable? I mean, we've seen a massive inflows into fixed income mutual funds, but interest rates now are much lower. So can this division continue to drive the results at the bank?
So your tone suggests you don't think Bank of America shares are moving higher. I mean, have you been selling the stock after the run-up that we've seen?
I think at best it's a hold here. I mean, this stock 13, 14 months ago was at $2.50. Now it's tapping on 20. That's a huge run-up. So these results certainly beat Wall Street expectations by a great deal. You wonder whether that's already reflected in the stock price.
You almost see that today in the pre-market action where it went up quite a bit, and then it's reaching to stay above the red line. Yeah. Is it all tapped out?
Well, I mean, we're up 20% just since February, and of course, expectations were very high coming in based on those blowout JP Morgan results. So at this point, I think you got to be cautious.
Yeah, at 26 buys, no holds, and trading at 25 times, right? So is it all priced in, is what you're saying?
Yeah, when all the analysts already love it, they can't go from a strong buy to strong buy.
David, very quickly, I can't help but think about those warrants that the government sold, that they got for all the TARP money they provided to JP Morgan and Bank of America. Some investors have hit home runs by buying those warrants. Do you think the government got rid of those warrants too soon?
Well, in retrospect, I think in fairness to the government, they're not in the business of trying to make money in stock warrants. They basically wanted to get out without having lost money, and I think they achieved that.
David, just also, consumer banking obviously is a core at Bank of America, but the bench there is not that deep. I mean, Brian Moynihan doesn't have a whole lot of experience in consumer banking.
That's right. And of course, that's so much of the business. It's really two businesses. You got the investment banking, you got the consumer banking. They've done some nice turnaround in the credit card, but they're still struggling, as we saw in the result today, in that home mortgage business. And so that's a big question mark we'll want to focus in the conference call.
Could be a source of concern. Okay, David, thanks so much for stopping by. David Dietze of Point View Financial Services and Bank of America.